Everyone hear me okay?
Sounds great.
All right. So when I logged in to Twitch and I was watching the stream, I'll just give you guys some basics of kind of what every market does and some of the basic concepts. Pretty much every chart does the same thing. Go to Coinbase and just give you some examples. So basically, you have three distinct phases in a market. You've got a lot of people call it consolidation, but it's actually incorrect to say consolidation because when you say consolidation, you don't actually get any info from it, and you don't get any knowledge from what's going to happen. What really happens is you have three phases. You have accumulation, which looks like this. Basically, you have a sideways move. And this is stuff you can look this stuff up. You can find this online. And then you have a topping pattern, right? Which is distribution. And then you have your trend. What the heck? Right, so then you have a move up or a leg up. That's what I call it. I call it a leg up. And then so further as you start your analysis, you should typically always start with your higher time frames, and then work your way down. So what's going to happen is you're going to find your levels within the leg up, and those are basically going to be drawn from the highs and the lows of your candles. And then as you and it should be relative to where you are in current price action, but we'll just we're just kind of looking at the concept. Um, so okay, so we'll just clear this off for a minute, and then just we'll give you guys some ideas of kind of the next step is of actually drawing levels and understanding what's going on with that. So what you'll notice, let's find the right tool, is you're getting these like peaks and valleys, right? So as you're trending up, right, you're just going to keep making, that's actually incorrect. You're going to make swing highs and swing lows, right? And what they end up doing is making these little valleys and these peaks, right? And so as you're going up, what's happening is support levels are going to be gained and they're going to be lost. When you're in an uptrend, levels of support need to be gained and they need to stay gained. When you start losing support, then you have a problem, and your trend is reversing and you're going to have a leg down. But as you can see, like in Bitcoin, we had a leg up. We did finally lose support right here, it looks like. So this is a segment of this big leg up, right? And you can see we went up and made a high. So when you're gaining support, you're going to keep popping off of these levels inside. So let's take a look at kind of what that looks like. Okay, so let's take a look at this move down inside of here. So just looking at why this move happened. Why do we bounce here, right? Or this area. So what's going to happen is what I call it is the move that took you, and I was talking about it in the Twitch chat, the move that takes you to a high. So for example, this move down, sorry. This moved down. This moved down from here, from there. So we'll just focus on that for a second. To sort of understand gaining and losing support. So this move takes you down. Once price closes above this high, on the 4-hour chart at least, that means support is gained. Support here would be gained. So it would be this high here. Once we get above that and close, support is gained. Now what you do to find the support level that's untested is you got to come back in here inside of this valley, right? Because it's making a valley. So you got to come back inside there and you got to find the level that's untested. And let's look at it. I'd say we gained this high right there. You can see we made support. We had support here, some resistance there, and it's pretty much untested. There's also maybe another level right here as well. Now what I would do then is I'll put a box here, and then I like to zoom in, try to go to a smaller time frame, and I just want to see, is that really the level? Yep, looks pretty good. You can see pretty well right here, right? So this is the move that took us up, gained it. So what you would do, right, is once you establish this, you know you have some levels here. What I would do then is mark it, and on the first time you come back to test this level, you're gonna get a pop, right? Which is exactly what they did here. They came right back and tested it, and then you get a pop. Let's see if we can find another example of what that looks like. Okay, here's one. Okay, so here we make a swing high. You guys hear me okay? Is everything? I don't see any.
Everything's good. I'm just sitting back. I got my pen,
All right,
my
cool.
notepad. I'm taking notes.
Okay,
Appreciate
great.
you being on with
Likewise.
us today.
If you guys have any questions, if I'm going too fast or you want me to review something, just let me know. So again, we're talking about right now. I'm just explaining like gaining support, and I'll go back and talk a few about the other concepts, accumulation, distribution, and how it all works. But some of the hardest things is understanding gaining and losing support, because everyone pretty much knows what support and resistance are. You can look it up online, but everything you read online is, in my opinion, is not actually true. Like, it's not a good explanation of how support and resistance work. So that's what I'm hoping to show you guys. So when you have an uptrend, right, or any trend, if you have a downtrend, it'll be the exact opposite. But for example, in an uptrend, when you're making highs, you're going to come back down, and the way I look at it is you should pop off of the highs and the lows of the candles. So like, so this high, right? When I come back down, I want to pop off of it if the trend is going to continue. Like, I want to keep making highs, and then when I come back and test, I want to pop. So we were talking about gaining support, right? And then we made a swing high here. So exactly the same thing I want to see. I want to go in here and look inside of this. Let me find it. Okay, here it is. So I want to find where's the support in here that I gained. And it's going to be the same. It's basically this right there. So I'm getting up. As I'm trending higher, I want to keep popping off of these levels, like these highs.
Real quick, Dope. Someone asked on Twitch, Dazzy Webb asked, what's a pop?
A pop is so when you're coming down, right? You're going to come down. So a pop would be you're coming down from a high and you're in a down move. and you're going to come and test the level of support, and then you're going to pop. So you're going to retrace higher, right? So a pop would be like this. So for example, we're coming down here, and then we test this level here, somewhere in there, right? And that consolidation, and then we pop. So then the move went from here. So delete this. So your pop would be from there, right? Because you came down, you made a low, you're testing support right here, and then you pop. So the markets in any product, they all move the same way, right? They all move from support gained to support lost, and vice versa. And I say support. I don't even use the word resistance anymore because it's just easier to think about it and visualize it whenever I do it. So when I say support lost, it's really, I guess you would call it a resistance, but I just say support. I know it sounds silly, but I think I can explain it and it'll make more sense to you. But yeah, so we were talking about like this level here, right? And this will be another example of a pop too. So on the 4-hour, we had identified like there was a swing high there, and we came down, and you can see this is exactly what they did here, right? Had another little swing high right there. So this is what I'm talking about. When you're trending up, right, you want to keep testing these highs. So you made a high here, and then you had a little pullback, right? So you pulled back right there. Zoom in a little bit. So if you look at your candles, you came up, made a high, and then you came down, right? So you came down, and then you pop. Same thing here. We get above that high, and we came right back down, and you test it right here. You come back and you test it here, right? Same thing here, right? You have another high. You make a high right here. Same thing, and you test it. So you're going to be gaining levels, right? As you're trending, right? And you want to keep gaining levels if you want to stay in an uptrend. Okay. So what I've done is I just marked some levels that I was interested in. So that one got tested. We tested it here, right there. So I'm not really concerned with it anymore because I'm really only concerned with the levels that are untested, because the trades are going to come from untested levels, and you're going to take the opposite of the move. So if you're coming down to an untested level, then you're going to get long. If you're going up to an untested level, then you're going to get short. And I'll show you guys examples of that. So just as I showed you before, I would mark the level here, and then as price gets down to it, I would get long. I would take the trade when it happens. So a lot of times, right, you're going to end up having, it happens right there again. You're going to end up having in really bullish markets like this, or really bullish trends, you're going to have to wait a while, but you'll just keep marking them, and as it happens, you can take the trades in real time. So like here's another example, right? You make a high, so you actually made a little swing high, and then you come down. You're making a high, and then you're going to come down, and then you're retracing and making a new high. You're making a higher high, right? So you're actually gaining support in here and it's right here. It's this. It's not going to be perfect, but it's going to be that area. So that little area of congestion, right, is where your support level is going to be. That I call it. You're gaining support, and then you come down and test it the first time there, and you continue higher. So you take the first test of that. Okay, so kind of getting back to where this level we're talking about. I'm just seeing a lot of examples over and over, so just as I see them, I'm giving them to you. So when we do come back down there, you would take the trade. You would take a pop right here. So this area right here, right in there, you would have came down, tested it, and then you had a ripped off of that level. You had a big first touch, and then you popped higher. Right, and then what they did is they brought it back down to this area, which is a support lost. So it's the same concept, right? You just you're gonna have to train your eyes to understand it. So that would be That would have been about a 2,000 point move right there. So let's look at losing a high and gaining a low. What does that mean? Okay, let me go to a little bit higher time frame. So I don't think we've gotten there yet.
Hey, DopeTrades, this is freaking awesome. I just had a quick question that also came up in the chat. Do you ever use Fibonacci sequences to determine the levels?
No, but so fibs are going to tell you levels if you know where to draw them from. The problem though with fibs, right, is that which fib do you trade? How do you know which fib to trade? Like, do you trade the 382? Do you trade the 50? Do you trade the 618? Which one do you trade? That's always the problem. And I started out when I was starting out like everybody else. You learn fibs and you think, oh, this is magic. But when you understand how gaining and losing support actually work, then you don't even need fibs anymore, because you're going to be able to see the levels with your eye, and it's not going to matter. Okay, so let's go back to how do you know? I don't know if this is a great example yet because it hasn't really happened, but maybe let's go back in time where Bitcoin did crash, and maybe we can. Yeah, that was a big crash. We'll just go over the example of what does it look like. How do you know? So we're just going back to when Bitcoin was like about $5,000, and you can see we've got. I hate that tool. What's going on? We have a leg up, right? And you make a high. Well, how do you know when the high? How do you know when trend is going to reverse, right? So kind of applying some of the basic things that I had said early on. Distribution always happens. Remember I said distribution in the beginning? So I guess it's a good time to talk about it. Distribution always happens after a leg or a trend up, right? Accumulation is right here. Always happens before a leg up. So accumulation. And basically it's that basing sideways congestion that everyone talks about, but they don't understand why it happens. It's that basing before a move up, and then you get the sideways basing or topping before a move down. So you're gonna have your move down here, right? So that's pretty clear. Anybody need further explanation? Does that make sense? Like, you see it all over the chart. On every time frame, you're gonna see it. All right. So we have a leg up, right? How do we know when trend is going to change? How do you know when this leg is going to end? Because at the time, this was all-time highs. How do you know? Okay, well, the easiest way is you find the move that takes you to the high. So you can see, right? Let me use a different tool so we can distinguish it a little easier. Right there, right? So you can see it's the move that took us to the high, right? You have a swing high. This is the move that started it. Now, how do I know when we're going to reverse trend? So what I would do is you mark the low. It's like jumping around. I think it's just the viewer. It's giving it a problem, but okay, there. So you mark your low. Now what do we need? We need a close below the low, which happened over in here in this congestion here. Right here. Happened in there. We actually closed below it. Now, what's going to happen then is once you close below it, you'll usually pop. So you usually you'll usually retrace, you'll usually have a move up, and you're going to come back into this congestion here, and you're going to test levels of support that are untested. Looks like that got tested, so they're testing something in here on a smaller time frame. But so what you would do is once you get below the low, and you're going to have you'd find your level of support that you're losing, that was just lost, which looks like right there. Right, so this would be your short entry because it's a level you're just losing, and you know you've lost the low. So when you when you know you've lost the high, I call this losing the high, right? This is the move that took you to the high. You close below it. And all you have to do is close below it. Now you know you should set up a trend down, a leg down, which is exactly what they did. And what do you test? You test what you gained. So remember I said for trend to continue, right? You're going to want to pop off the highs. So you're going to pop off the previous highs as you're moving up. And then also you'll look for levels inside of here that could potentially get tested. I think they left this stuff untested, but that's okay. So you would be queuing your eye, you would be drawing your levels, and you would know, okay, this is where I would want to get long if it happened, or if you were shorting, you'd be looking inside of these prior leg up, these prior levels that you're gaining as profit targets, if that makes sense, right? So everything is pretty much by design, right? Once you start understanding how this stuff works, you're gonna be like, wow, this stuff continually is like almost perfect. It's like they do it on purpose, but yet everybody thinks markets are random. But really, this phenomena, I guess, I don't really know, I can't explain why it happens, but it happens over and over and over, as long as you understand how to identify it. So what you want to do is you only want to take the first touches of the trades, because you've confirmed it, right? You've confirmed, okay, there's the move that took me to the high. We lost the high here, so I know a down leg should happen. The down leg is going to retrace the up leg, so I'll draw that. The leg up, and then there's your down leg, right? Leg down. Same thing on every time frame, over and over and over. And then you're going to take the first touches. So you gain that, you take the first touch of it there. Where's your target from there? Well, let's go back to right here, what I just lost. I'm losing a level right here, right? It's right there. So if I were to take this long for here, if I were to take that long, right, where would I have to go? Well, what did I lose in here? In this congestion there, because I have a leg down now. What did I lose? I lost something in there. There's a support level that got lost in there. It's probably that candle right there. That little doji candle right there. Boom. That's your target right there. Right? Any questions on that? This is called losing a high. Does that make sense? Anybody have any questions for me on that? I'm sure there's gotta be.
Yeah, just to clarify, how do you determine when it's going to turn around from the high again? Exactly. Like, at what point do you realize, is there a point that you can actually figure out when the trend is about to go into reversal? And is there any technical analysis that you use for that?
Yeah, I'll explain it again, just so it's a little, maybe it wasn't as clear. So the whole time, right, when you're trending up, right, you're gonna start noticing distribution. This is your first clue. The sideways movement, right? Maybe it doesn't look sideways to you guys because you're not used to seeing it, but your first clue is like it's gonna look like a sideways topping. And let me just, we'll come back to Bitcoin, but I'll show you another example in the S&P 500.
No, I understood what you're saying, but
Okay.
like for instance, at this moment in time on your chart, it looks like it turned at right around 5,000.
Yeah.
Would you have
No.
known that it was
No,
going to
no,
turn
no.
around? You just
No.
would have known that it was about to turn around this area. Is that correct? Is that what you're saying?
Yeah, so I wouldn't have tried to trade the 5,000 short. I wouldn't do that. You could maybe trade you could have probably traded this little move. From there, you probably would have gotten confirmation and known, because that right there is actually the tiny from this red candle. That's actually the move that took me to the very tip of the high, right? Like right there, that move up.
Gotcha.
So what I would have done is the exact same thing. How do you know? You can't. You wouldn't want to short. You wouldn't know to short here. Maybe you might have if you go to a smaller time frame, but I don't want to zoom back that far because we're at 5,000 here. But so okay, same exact concept though. How do I know when to short? Well, I got to get below this low that took me up to this high. So the starting point of that low, I got to get below it. So let me just draw a level there. I got to close below that, which I didn't do it here, but I finally closed below it there. Right here. I'm drawing this weird looking circle. In those candles, I finally closed below it. So that's telling me that I just lost this high. It doesn't mean that I get short right away. It just tells me that I lost the high. So where do I get in? I would get in somewhere in here. Somewhere in this congestion. I can't see it because it's a 4-hour, but it's actually probably a smaller time frame. You could probably see it better. But the support that you're losing, that's lost inside of there, that's where you're going to get short. So now okay, I got below this. So then I would be looking at this leg up if I were trying to, actually get the short. And then my target would be somewhere in here. Somewhere down in here. This thing's having a problem. There we go. Somewhere down in there is where I would have tried to reasonably taken profit at. And you can see like they tried to accumulate right here in that congestion there, right? So that's how I would have tried to do it. If that answers your question, how do you know? Well, you don't necessarily know when it's going to turn. Maybe you could make the case that you could use fibs for an extension. Maybe you could make the case that somewhere around the 618, one of these levels, it would turn around, but it's not going to be perfect. I mean, that's how you could use that tool, but I would advise not to trade it that way. Just wait for what's pretty much a given, which is losing a high. That example. Gaining a low is the exact same thing, the opposite. We'll just use it right here. Here's an example of gaining a low.
Hey, real quick, DopeTrades. I don't want to take off your. I know you got a good vibe going on right now. A lot of people are asking about like a live charting.
Live charting? What do you mean?
Like
current price?
the current price of Bitcoin and predictions and how you would what you would see going on with it right now.
Oh, so they want me to tell them where to buy and where to sell. Okay.
No. We're just. I mean, I don't know. Some people are just asking because they don't understand how you're doing these fibs with that, or you're not doing fibs, but on like a live chart, you can't tell what's going to happen. So it's, you know what I mean?
Oh, what do you mean you can't tell? So, I mean, let's just look at like what's with Bitcoin, like what's going on right here. All right, well, on the 4-hour, You can see, like, to me, right, this looks like distribution to me. Like, just looking at it from here. And I'm not saying this is going to happen, but just going back, right? We have a leg up. So we have a leg up. We actually have legs within legs, right? We have a leg up, legs within legs. So that one got tested. To me, it's 8,300 area is untested. I lost the high. So exactly what we were just talking about, right? If you want to know, like, a prediction of what might happen with Bitcoin, right? There's the move to the high. Did I close below the high? Oh, sure, I definitely did. What can we get back down here? Maybe we can, but what do we have to do first? Well, is there anything in here that's untested? So that's what I look at. I look at where we're losing and gaining support. Is anything untested? Maybe. And then you would go back and you draw your levels of, okay, well, where's support? Where did they get lost? Where did it get gained? And what do I have to do to it's a little more complicated. Like, what levels do I have to lose to continue to go lower? Stuff like that. If you wanted to just scalp, which I'm sure a lot of people, that's how they trade, right? They just scalp. Well, what do I do? Well, it's the same exact concepts on every time frame, right? Okay, for example, just kind of going with what we were just talking about. There's the high. There's the move that it's actually right here. It's this one. There's the move that took me to the high. Did I close below it? I did. Close below it right here. So what do I do? I find, where's my entry? I've already, at the time when I closed below it, I've started this move down. Then what the next thing that I do is I identify areas where support was lost, which is in here, in that congestion, right? So when price ticks back up, I would short in that area, and it's targeting right here. Right there. This is the start of the leg. So how do I know this is the area it was going to test? How would I know that? How would you know that you could short from here, from about 16,500 all the way down to 14? So how would you know you can get a 2,500 point move? How do you know that was going to happen? You have to understand gaining and losing support. And then you also have to understand how the leg works within that. So the levels are being built inside of your leg. So really you have a leg up and you have a leg down, right? And then inside of it, you're building levels of support that I call it. It's really support and resistance, but it's simpler when once you understand it. Support gained, support lost. So let's talk about that, I guess, for a second, since which we kind of went over in the beginning, but I'll go over it again because I'm sure everyone's like, "Whoa, what's going on? This is crazy." So to gain support, what does that mean? You have to get above the move that took you down. So for example, there's a leg down, right? There's a move down that I drew with the arrow, right? To gain support, to gain any levels, I got to get above this high. I got to get above that high right there. Price has got to close above it, which it finally did right here. In this candle up, we closed above that high, right? Now, that's telling me that stuff inside of here is gained. So you've got previous highs that you made, right? Little levels that are inside of there are going to be gained in that process. So getting above this is actually gaining these levels in here. What else? What else? Let me see. We had a level there, I think. Pretty close. Somewhere in there. It's not perfect, but it looks pretty good. We'll just put it. There we go. It's close enough. So all inside that consolidation that people would say, or really accumulation, right? All inside of that, levels are getting gained. And remember, you don't gain a level until you get above the move that took you down. So let's write that out. Gaining a level of support requires price to close above the high that took us down to the low. Does that make sense? Any questions on that? Does that concept make sense? I have a swing high. I came down. If I want to gain support, I got to get above it. This high right here, I got to get above it. Which I finally did right there. Does that make sense? Any questions? Can I get it? Somebody say yeah. Somebody tell me that makes sense.
Hell yeah.
Yeah.
Because I'm not in Twitch. I closed it out. I didn't want the echo, so maybe I should open it back up. But
Yeah, you got some questions on Twitch, so
let me try to pull that back up real quick.
One of the questions from Twitch was, how do you find the level? How do you know where that is?
The level is always going to be the tips of the candles, so the wicks, the highs and the lows. Well, of any candle could potentially be a level. It's always a high or a low. That's what I use anyways. A lot of people talk about, well, maybe I should use the open or the close. But I use the highs and the lows of the wick.
Awesome, thanks. And also, thanks for jumping on. This has been really great to hear your process and see it. I always love seeing the different process that people have.
Yeah, this was in IRL, right? On Twitch. IRL stream.
Yeah.
Just gotta find it again. Oh, there it is. Cool. I see my chart. All right, now I can see the chat now. Okay. So, I see a word structure. This guy mentioned structure. It just brings me to an idea. A lot of people talk about structure, but what they're really, it's what I call legs, price legs. And what are legs? Legs are essentially just trend, right? That's all it is. But the thing is you have legs within legs, right? So, and you can trade all of them inside of it. So you have a leg there, a small, a tiny. It's a leg within a leg, right? Then you have another segment. They're like segmented, right? You have different smaller trends within this bigger picture, within this bigger leg down. So you can actually trade all of this if you understand where is support lost, where is it gained, like, and how trend works. But so I'm getting sidetracked. There's so many things to talk about and how it works. But yeah, we were just talking about this. So I'll just throw this in as another thing, a note you can take. Everybody know what this is. Everyone would say, oh yeah, that's a wedge, right? Okay. Well, every pattern that you learn, every pattern that you're going to trade, every pattern that you're going to see like this is either one of two things. It's either accumulation or it's distribution, right? Like it's the same thing here, right? And eventually you get to the point where you're like, you don't even need to draw these anymore because you understand how the levels are lost and gained inside of it. Same thing, right? You could draw these everywhere because it's pretty much the most common pattern, right? But all it is accumulation and distribution. And like I said, what's accumulation? It's the basing pattern before a move higher. What's distribution? Accumulation. I'll write it out. Accumulation equals basing pattern after a move down that occurs before an up move. And it often forms a wedge or a head and shoulders or a double bottom or double top, whatever you want to call it. It doesn't matter. When you start really understanding this stuff, you don't really even look at it anymore the same way. Okay. Let's see. What else can I talk about to blow your guys' minds?
Minds are blown right now. Love it.
Let's see. I want to show you guys an example of failing to gain and failing to lose and what that looks like. Here we go. Here's an example. Commonly known as the head and shoulders, but so few people understand why head and shoulders patterns form and why they fail, right? Let's talk about it. Let's break it down technically. Some true technical analysis that you're not going to find anywhere else, right? I should charge you guys like 10 grand for this lesson, but it's all good. I'm a nice guy. All right, so what happens, right? Remember I said in the beginning, trend is if you want trend to continue, right? Because you're going to have these little pullbacks, right? If you want trend to continue, you need to pop off of these last swing highs, right? So that's a swing high right there. And then we pulled back and then we popped. So we actually I drew it wrong. We actually pulled back and then we popped and went higher, right? Pretty easy to see, right? Right, we went higher. If we want trend to continue, when we retrace, we need to pop off of it. We need to pop off that previous high, which is what they did. Okay. Now, so that's essentially how trend works, right? Same thing happened right here too. Look, oh, man, this stuff just jumps out at you like crazy. Same thing right there. Boom. We popped. We went higher. What happened? We came down. Boom. Popped. You got to keep popping off of it if you want to continue your trend, right? All right. So you got that idea, right? That makes sense. The concept of trend. You got to keep popping off of these retracement highs. Look right there. I'll just draw it out one more time because I know it's all new. What is that's what it is, the magnet. I hate that thing. There you go. Right here. Right there. Happened again right here. Blow your minds. I want to keep popping off of it. Right? Okay. So with that concept, the trend, right? Now, what happens when it doesn't pop? What happens when it doesn't pop, right? What is losing? Well, we talked about losing a high. What is failing to gain? Because what I would say is every time you're popping, it actually happened right there. Not bad. Close enough. Right there. Close enough. Like that's actually, I call that front running the level, but it's close enough that I would say it continues. So what happens when it doesn't? What happens when it fails to do that? What happens when it, like, let's pretend like, what happens when it would go down, right? If it went lower and it failed to pop off of it, right? Well, that's what I call failing to gain. And it actually happens right here because as you can see, we make a swing high and we actually got above it. So this is at 19. To be honest, this is how you can know to short 19.8, like short this area right here. And everyone would be like, what? But I'm going to blow your mind for a second because this is actually fairly recent, right? the high, the all-time high, right? On a smaller time frame, we'll just look at it. Because I told you before, this stuff works on every time frame. So you make a high, you get higher than that high. So you got to make a new high, right? Go back to the hourly. A little clearer. I think it's clearer to show the concept. You make a high. What I want to happen is I want to make a high and I want to pop off of it when I come back down to it. So what would that look like? I make this high, I got a marginal high there, and then I would expect this, if the trend is going to continue, we want to go higher, right? But we didn't. We didn't go higher. Uh-oh, that means this failed to gain that support level, right? Because we got above it and then we didn't pop. So what happens now? Well, how do I know where to trade? Really easy. You just mark the high, because when you fail to gain a level, it means you're going to reverse. Because I said if trend is going to continue, you should continue popping off of supports that are gained. Well, that failed because we make a high, we got above it. If I wanted to continue the trend, we should have popped off of it, but we didn't. So what I do now is I mark the high, and then I take the first touch of that high. Take the first touch of it. So when I got below it, we got below it. When we came back to it, boom, first touch. I'll write it out, first touch. First touch of it, that's your short point. And then look what they did. They sold off massively. Boom. And at the same time, you also lost the high. So we're going to combine the concepts real quick. You lost the move that took you to the high. You lost it in here. So also, you know, leg down is coming. You know, trend is going to continue down, right? Which it did. And then they also, so we kind of put it all together for a minute. You're also, this move there is testing that. So trend isn't done yet because it's still popping off support that was gained. But you would know, okay, I could short that for like, I don't know, 1,600 points or something. And then the way it works is inside of here. So maybe I'll draw a triangle point. Maybe it's easier to see, right? So here, inside of that, right, that's really a right shoulder. It's a head and shoulders pattern, right? But we're not looking at this anywhere. I'm not looking at it as head and shoulders anymore because we're looking at it technically, because a lot of people say, oh, it's a head and shoulders, but what does that even mean? Well, head and shoulders, as I said before, is a distribution pattern. Remember? What's a distribution pattern? We talked about that. It's a topping pattern. It's that sideways basing move that happens after a move up. That distribution pattern, that accumulation, that sideways move that happens at the bottom before a move up. The sideways move that happens at the top before the move down is distribution. The inside of it is a little bit more complex. So as I said before, all patterns are either accumulation or distribution. So you would say, oh, this is a head and shoulders, right? But I say, yeah, it is, but it's also more technically correct in knowing that it's going to fail is when it fails to gain the high. Now, let's say that I was wrong and I try to get short there, and maybe I'm like, well, where do I put my stop? Where would I put my stop, right? I'd put my stop above the high. Your stop would be above that high, because if I did manage to get above it, then that's signaling to me trend is not done, it's continuing higher, right? But it didn't. So that's just an example of where it would fail. And this happens like 10% of the time, I'd say. 10% of the time you're going to fail to gain support. And then the other like 80-90% of the time, you're going to just be popping off levels that you gained. Okay. Let's see. Back to failing to gain. I think that pretty well covers it on failing to gain and how a head and shoulders, how that all works, how it all ties in, if that's not too complicated. I don't know, man. I could go on for days and just show you guys examples if you want. I'll sit back and show you guys. I mean, I can show you on any product. So this is Bitcoin. Let's look at what's something else. Ethereum. So Ethereum. Let's look at that. Okay.
I got a question here.
Yeah. Go ahead.
What you're showing as your distribution area, could you also use the TTM squeeze to confirm that?
I don't know what a TTM squeeze is. Is it an indicator? I would show you. Okay, how would I use an indicator to? Let's go back to that chart for a second. I'll show you the easiest way. Like when I started out and I was trying to understand how do I confirm distribution, right? So let's look. So we, obviously in hindsight we can see what happened, right? But how do I confirm that? Well, I gave you a couple of examples, right? You can see it's basing, it's topping at an up move at near the highs. I also showed you, oh sorry, that's a totally different example, but it's almost the same. We were back at 19,000. Let's go back here. So same thing, right? So I just showed you we failed to gain. We have a sideways move, which is after a move up, so that's definitely distribution. But how do I confirm it with an indicator? Let's see. Indicators. Good old MACD. Nobody seems to understand how to properly use MACD, but I'm going to show you that. Oh, wait a second. What's going on? How the heck? It's a little bit fishy using the team viewer. I got to get this smaller. There we go. Okay. So, right, most people when they trade MACD, what are they doing? They're like, oh, it crossed, right? Oh, it crossed. That means I need to get short. The moving averages they crossed over, right? Well, if you've been trading for a while and you started looking at this stuff and you've learned this concept, right? You started to realize like, well, it doesn't always work. I mean, a lot of times it does work, but it doesn't always work. And I'm interested in making consistent profits. I want things that work consistently, right? Not things that kind of work. So how do I use MACD? Well, we're looking at the chart. Like, well, a lot of people spend the majority of their time looking at this indicator to tell them what they're supposed to do. And I say, don't bother with indicators because what's really happening is up here in the chart. If you understand how the stuff that we've just been talking about. But right here, okay. So how do I know this is distribution? If all I could see was this part, if all I could see was this on the chart, how do I know that's distribution? How do I know? Okay, well, I'm going to see, what does MACD stand for? Moving average, convergence, divergence, right? MACD. Moving average, convergence, divergence. Let me make this a little bigger. That's the wrong spot. How do I know that this is distribution? What's happening? Isn't there a divergence here? Right here? Boom. Divergence. Isn't MACD diverging right here? Isn't it? What's it diverging from? Oh, it's diverging from the price. Right? Does that make sense? That's pretty logical and simple, right? You guys hear it? Yep.
Yes, sir.
So that's right there. That's how you would use MACD to confirm distribution. Now, it doesn't have to. Just because you see distribution doesn't mean the move is done. But you asked, is there an indicator that can help you see that? And it is. There it is. Boom. That's how you use MACD. That's how I use MACD. I don't worry about crossing the averages. I don't care about that because it stands for moving average, convergence, divergence. Well, what's it diverging from? It needs to be diverging from the candles, the actual price, or it needs to be converging with the actual price, not the other way around. And you see the exact same thing in accumulation, right? We'll just go over that for a second, because you can see it right here. So I've got a move down, and then what happens? We start basing. You get this basing pattern right here, right? And what's happening? Isn't your MACD converging right there? so it's trending up. It's telling you that what's really happening, what's causing that is you've got multiple time frames. You've got momentum being generated from higher time frames. That's slowing down this momentum down, and it's or actually probably the momentum upward is carrying it. But what's going on is you're shifting momentum from different time frames, and that's why that happens. It's the best way to explain it, like the simplest way to explain it. It's not really that important, but uh, that's an indicator. That's how you would confirm distribution and accumulation if you so choose. If you need an indicator, I would say try to get better at trading without using them. But yeah, let's see. Anything else? Any other questions? Anything else we're interested in? Maybe I'll just show you more examples.
Someone asked what time frame we're in.
It's 1 day or 1 hour.
Yeah, this is a 1 hour chart for now. Yeah, 1 hour chart. So, like with Ethereum, right, where it's kind of doing the same thing, but I don't really want to. There are things that have to happen, right? If we're going to reverse this trend, right? So we can see, right? Ethereum, right? We keep going higher, right? So right here, we'll just start with this. Like right here, we made a high, right? What happened? What did I say would happen? You would need to happen to continue going higher, right? You want to keep popping. When you come down and test it right there, you want to continue. So that's essentially what you're looking for trend to continue. Now, what I would say, technically, it could come down into here because that's support that got gained, and it probably will come back and test this area in there, right? Because what did I say about gaining support, right? What do I have to do to gain a level? Well, we just talked about it, and with the Bitcoin, but we'll show it on Ethereum right here. So I have a high, a swing high. I got to get above it. I got to close above it to gain something. And what I'm going to do is I'm going to end up gaining something inside of this little valley that's being made. And what's gained? Right there. We haven't got back down there yet. So I imagine at some point we will come down and test that. But if we did do that, what would end up happening? Well, here's a move that took you to the high. Look what they did. They held it. We didn't close below it. We held it right there. So that's telling you like they're wanting to keep the trend going, right? They're not ready to lose it yet, but they're wanting to. They tried to, so probably it's likely we'll go higher maybe first. But this is just an example. I mean, this stuff happens over and over and over on every time frame, on every chart, no matter what it is. We'll go back and just review like when Ethereum crashed back in the day here. Right here, Ethereum crash. Well, how do you know where it's going to go? This is exact same concepts. I'm using a 4-hour chart just because it's not as congested and it's easier to see. So again, where did I start? The exact same thing, right? What do you expect to see at the bottom of a move? Oh, there's accumulation. Okay, what do I expect to see at the top of a move? Distribution, right? Well, if you're one of these guys and you like to draw out your wedges and your patterns, boom, right there. There's distribution, right? Like I said before, all patterns are accumulation or distribution. You just have to understand what that pattern is trying to do and what it's telling you and how to actually read it. Okay. Well, what's going on here? How do you know price is going to go lower? Well, we're not too far off that. Maybe I can go to a smaller time frame for a minute. Look back at it. Yeah. On the 1 hour now. How do I know that how would I know to trade this? This is the exact same concept that I had just made. Right? There's the move that took me to the high. What do I got to do? Got to get below it. I got to close below it, which I did right here. This one wouldn't have been as great because you didn't get as great of an entry maybe here though. Actually, on a smaller. This is the move that took me to the high. This is a better example. The move that took me to the high. The low that I got to get below is there. The start of it. I got to close below it. There. Now, just because I get below it, I close below it, doesn't mean I get short. I got to wait for, we're going to usually come back and test something that was lost up in here. What did I lose up in here? It's probably a smaller time frame, but I'd say right there. Yeah, it's actually right here. My bad. So we had support there for a second, and the reason why is, I'll show you. Maybe we go to 15 and I can see it a little easier. Right here, you can see. It's a 15-minute chart. Right here, I made a little high, and it makes a little, your levels are going to be like, they're going to be like little peaks and little valleys. Like that's kind of like a peak, right? And your level is going to be inside of it somewhere. What I did is just drew the start of it. I just took the level from the start of it, like the start of the move right there that took me up. So I just drew it at the bottom of it, the base of it. It could be somewhere in there, give or take, if it's untested, but this is close enough. So what you would do is you would go back to your hourly. Well, you could actually take the trade on the 15, but that would be your area to short because we were waiting for confirmation of, and I don't even like to say the word waiting for confirmation, but in this example, how do you know trend is going to reverse? How do you know that it's getting ready? Well, you said we got distribution. We lost the high. Where's our entry? It's going to be the highest level untested. So it looks like this got untested, but this got tested. So that's not good. That shouldn't go. It shouldn't go back up there. The levels that are in here got tested, that formed. So what about this one? So there, what's untested there? Well, it wasn't. It was untested, so that's where I'm going to take the trade. So always taking trades that are off of untested levels. That's your highest probability. All right, so that would be your area to short. Go back to the hourly so we can see what's going on in this example. That would be your area to short. Your target, you would think it's going to be below that low. It should be below there, right? Because we're reversing trend. Well, where did this move really start from? Where did the leg really start from? Let me draw it out with this one. Where did this really start from? That's the leg. The start of the leg, right? The first place that I gained support and left untested. Where's it at? I think it's somewhere in there. Pretty close. That area of consolidation, right? I'll show you a little trick too. A trick. How do you find levels? Man, I could go on for days. How do you find levels within accumulation and distribution? This is going to blow your mind too. Take the candle in the consolidation pattern or the accumulation, right? Take the candle that makes the low. It's one of these two candles, right? Inside of there. Generally, this is a general rule of how you find the level. Inside of the consolidation, inside of the accumulation, right? The candle that made the low, market's high, and that's your level. Market's high. Well, let's just test it. Did it work? It looks like it worked almost perfectly. That's your level, the high of the low. The candle that made the low, market's high, boom, pretty close. Look at that. There you go. That's where your target would be if you're shorting. Now you could get it. Maybe you're not feeling as adventurous and you think, wait a minute, that's crazy how you could predict that. Well, maybe this would be your target because I'm gonna be thinking, okay, I gotta go below this. This looks untested. This consolidation here, right? That that level that I built right there and I gained it and never came back to test it, well, maybe that's my level, right? So maybe I ended up taking profit there at, or taking a profit on the short at $545, right? Now, what you're noticing that's kind of interesting though is we actually went lower and tested this level here, but we didn't close. So you would technically be right to long here, except you're going to take some pain because it actually didn't close. But let's see, let's go back. Maybe I can see it on the 15. Let me see what happened. What do we do? There's going to be stuff inside there. Yeah, there is. There's a level right there. Look at that. Boom. Get rid of that one. Show you that one. So how they work inside of it. So inside of your time frames, right? The way you'd find like your exact entry is you would look at inside of those consolidation. Well, what did I have to pop? What did I have to gain? Was that? And then your red candle comes down and tests it, and then you get a move higher. And ultimately testing the leg start, which gives you the big pop. So I guess just kind of expand. I'm giving you guys a ton of information at once, but the untested levels down at the bottom of the leg is where you get your biggest moves. It's where you get your biggest pops. The untested levels at the top of the leg is where you get your biggest drops. If that makes sense. Because what's happening is inside of this wedge, right? Inside of this process, inside of this whole distribution process, you're testing levels. You're going ahead and getting first touches and you're testing them. So when you're testing them, you're making way to go below them. Or if you were looking in accumulation, you're testing all the stuff inside of it so that you can go higher. So there's nothing to test, so they can just shoot right through them, and you get these huge moves. So that's how you know. That's kind of how you dissect trend and how you trade it all in one. It's a ton of stuff I gave you, and there's more stuff I haven't given you, but there's so many concepts in there that I gave you that we require you guys to study to understand. But that's kind of the progression of how markets work. Any products, cryptos, futures, currencies, stocks, anything. If it has a chart, it pretty much follows this process technically. Yeah, so any other questions? Kind of running out of things to say. I mean, aside from just showing you guys different ideas, different areas. Like right here, this jumps out at me like that right there. This area in here, we gained it and we didn't test it. Just like right here, this high got gained and we didn't test it. All right. Anyways, can I explain it on an actual situation in Ethereum? I just did. We'll go back. I showed you an example. So I'll be looking at this leg up. Now what I would do is I mark levels that get gained and untested. So that got tested. So somewhere down in here, right? Somewhere in here, there's a level that got gained. I would say right somewhere in there, right? How did I know it got gained? The level was gained. How did I know? As I've been showing you, there's the move that took me down to the low of it. I got to get above that. I closed above it. So inside of this little valley that's made, inside of this valley, there's a level of support that's untested. And that level is like right there somewhere. So what would I do? I'd mark it. When price comes down to it, I would look to get long there. Can I show you on a 15-minute chart? So it didn't get tested. We gained it. I'd look to get down there and get long if it did. And then what I would do is find the level of support untested above, and that's my target. Can I do XRP? What's the name of the process? Chart reading. I don't know. XRP USD. What do you guys want? Bitstamp, Kraken? Does it matter? I don't guess it matters.
Real quick, deep trades. I
Dope
really
trades?
appreciate you, Dope Trades. I'm sorry, Dope Trades.
problem,
I'm
no
like
problem.
tired right now. I really appreciate you coming on and showing us some of your stuff, man. It's really awesome.
Okay, no problem, man. No problem. Appreciate it. All right. What happened with Ripple? Okay. What happened with Ripple? Okay, and another person asked, what would be the process? The process, right? The process every day is you're going to start from your higher time frame. And then what I do to give me an idea of what's going on is I mark the highs and the lows. Start with my weekly candles. And I mark the highs and the lows of those candles. And then I go into a daily candle. And then what I do is I start looking at what is important to what's relevant to current price. Well, I start dissecting the legs, right? So I have a big leg up, right, in Ripple, right? You can see on the daily, it's the exact same thing we've been talking about, right? I keep making, so I'll color it different so we know it's a daily. We'll color it like purple or something. That's a daily level. The weekly is also a daily, so we'll just leave it the same. Where else do we have levels? Right there. I'd take the highs and the lows of the candles. That's a daily level. That weekly candle is a daily level. You know what? I'll just draw them together so you can see that they're both right there. Boom. This is the same thing. So as I said, man, all the stuff happens on the same. It happens all over every time frame, right? Happens all over everything, every time frame. So looking at the daily first, right? I'm gonna get an idea. Well, what's the trend telling me? Well, the trend was telling me that we're obviously in an uptrend, right? Well, what do I got to do to reverse that uptrend? I gotta either lose support somewhere, or I gotta fail to gain something. Well, what happened here on the daily? What happened? We make a high. This is an exact. We just talked about this like 15, 20 minutes ago. Make a high,
guys.
right?
Mic check. Sorry.
No problem. No problem. We hear you just fine. You make a high right there. You get above it, you make a new high. Now what happens if I want to continue the trend, right? What should happen? I want to come back down and pop off of it, at least to some degree. Did it actually happen? Oh, it did. On the smaller time frame, it did. We actually did. We make a high, we come down and make a new high, we pop off of it, continue higher, right? So it did on the smaller, but I always look at all the time frames together and I tie them together because they're all telling you a story of what's happening with the trend and the momentum of the price action. So in this example, in the daily, it's failing to gain because we got above it. We should have continued higher on the daily, but we didn't. So it means we actually closed below. So that's important too. It failed to make a new high, just as Kool-Aid Man 56 says. It failed to make a new. Well, it made a new high. It failed to gain the high, right? So what would I do? Well, my short would be that area. Again, if I were just trading the daily chart, that's how I would know. Okay, that's a first touch of that. So then I would short it, and I would expect to move lower. Then my target would have been this level here, this next purple level. That would have been my target, which you see they came down and got, and then they had a big rip off of it. But going into Ripple, he said he wanted wanted to look at Ripple, so let's do it. Let's see. Let's see what happened. My process. We're kind of answering two questions at the same time: the process and what happened. So I'll go back and do it again real quick. I'll just go from the daily because there's not a lot of weekly candles. It's the same idea, right? I'm looking at the leg. I'm drawing candles, not arbitrarily. I'm drawing them from the highs, the swing highs and the swing lows, of price that is relevant to where I am right now. And right now, what's relevant is kind of this area right there. That leg is kind of what's relevant to me, because I mean, it's all relevant, but in order for things to happen, in order for levels to get gained and get lost and price to continue in certain back down the leg, it's got to go through a process of progression. It's got to progress through it. It's got to progress through these levels and lose the levels and gain the levels. And really, if you think about it, it's totally logical. It's how trading works. It's how the markets work. Like, really, you know what I mean? It's where people are getting in and out of trades. So, all right. So I marked those daily levels, and then I'm just gonna go to like a smaller time frame and just kind of look at how did price react off of them. And like, they're pretty significant. Like right here, when we came back down to it, we didn't actually quite get to it because but it's close. I call it front running the level, but it's not always going to be exact, but it's going to be close. So you can see, like, as we came back down to it, like these daily levels, right? Price reacts off of them. Same exact thing here. Same thing. I mean, you're seeing it over and over. Like, we're just getting reactions off of it. So that's how I would start. And then if I actually want to trade it, like if I'm intraday trading it, then I'm just going to start breaking down the legs and looking at levels that are gained and lost within it. So I know, like, overall, the bigger picture is uptrend. So overall, bigger picture was uptrend. I'll go to a 4 hour just so you can kind of see. We know overall, obviously, bigger picture is uptrend. We had a correction, got a pullback. What do I got to do? What do I got to do? How do I know trend is going to go lower or it's going to reverse? How do I know? What do I got to do? We talked about it. I gotta lose a high, or what? I have to fail to gain. So I gotta lose support, lose a high, or fail to gain. Actually, losing support and losing a high are one and the same. It's just a little bit more in depth. But so now what? Well, how do I know? How would I know price is going to reverse here? Okay, exact same concept. What is all this? What does all of this look like? Well, maybe if I go to a smaller, let's check it out, a smaller time frame. It's really, what does all of that look like? What would you say? Is that kind of like sideways, right? It's not really going anywhere. Or really, I mean, to me, I would say all of it is, but because you had this huge move from up here, and then you have all of this. This is just crazy, right? Crazy, huge amount of time accumulation. And then here you're having distribution, because it's kind of sideways, but you could say that's distribution, that's accumulation, that's distribution. So we're breaking it down to the leg. All the things that we talked about, the exact same thing over and over again. So if I want to go lower, right? If I was trading this thing and I want to go lower, I got to lose a high. I got to lose support somewhere. I got to find the move that took me to the high, and it's somewhere in there. Somewhere there. I got to get above. I got to get below it, which they did. I got to close below, which they finally did. Somewhere in there. And it's setting up, it's telling you that trend is reversing. It's going to reverse. And then guess what? Boom, we come down. And then we're just testing levels that are untested. That's it. Sometimes they do test. Sometimes they hold. Sometimes a level is significant and it'll hold. And it won't go through. And that's okay. It's just telling you that the momentum hasn't moved enough yet. But Maybe this is on the higher time frame. Let's look at that for a second. Maybe that's a bigger move to the high. So really, you gotta get below the move that took you to the high. And I guess that is it on the bigger. That could be it, and we haven't actually lost it yet. Can I do the Mac Daddy to make sure? Yeah, I can do the Mac Daddy. Can I do the Mac Daddy? All right, let's look at it. Well, we know it. We know it's distribution because it already happened. Did the Mac Daddy confirm it? Did the Mac Daddy confirm it? Let's see. Let me go to like a 2 hour because there's a lot of stuff happened. Did the Mac Daddy confirm distribution was going to happen? It started turning. Here was your distribution. All of this actually is your distribution. That sideways base topping. And then there's your confirmation on the Mac Daddy, right? And it's telling you that's distribution, right? Am I just making the stuff up? I don't know. Am I? How many examples do you need to see that it does the same thing over and over and over? And that majority of the stuff that you read online is not as useful. I think it's not that useful, or it's hard to understand. It's like lacking depth of information. The Mac Daddy baby, yep.
So that's really great info. I just wanted to ask, have you already done the TRX?
TRX? Nope. I can look at TRX.
I think that's super great.
Sorry, TRX. Is it TRX USD or TRX BTC?
Let's
BTC.
do the BTC.
I've never looked at this thing, man. Never looked at this chart before. I have no idea what it is. So I don't trade crypto a lot. Like I said, I trade futures and currencies, but as I said, all charts do the same thing. So I could see somebody else was looking at this thing. Just get rid of all that, if that's all right. Okay. What's going on? Well, it looks like it already probably lost the high, but we'll see. Same exact thing. I would start the day. Like if I were going to be looking at trading some of this stuff, I'd do the exact same thing. I'd start marking my levels. And there's not a lot of them in here. Really not a lot. So yeah, that's really the only thing relevant. So I just go back in, start looking at some other time frames. And I'm trying to get an idea of what's going on inside the leg. Like I have a leg up, right? So it's going to tell me where my levels are.
So what were those levels you're creating? I keep forgetting. I'm watching, but I don't know how to mark them.
Every
time you put the lines, that's what I'm messing up on.
Yeah, so all I'm doing is I look at levels from the high of the candle and the low of the candle on the daily first to kind of start the day. Like if I were going to be looking at trading this thing, that's what I would do. I would start drawing them from the highs and the lows of these daily candles, right? And then I would just so that I know that they're there. And I know that that's a daily high and daily low because that usually gets respected. And then what I do is I just rotate down to smaller time frames, and I start approaching it, like start breaking down the leg because I know this is a leg up, right? So I'll draw it out. Leg up. Pretty self-explanatory. A leg up. What's a leg? Well, in case you forgot, leg equals trend. All right. So a leg up, and I start breaking it down. I'm like, all right, well, what's going on? Well, what's it trying to do? Well, did I gain levels of support? And we talked about, well, what is gaining support? Well, we talked about it. You have a move down. Sorry, you have a move up, followed by a move down, and then you get higher, right? You got to get above. Get rid of this now. You got to get above the high that took you to a low. So let's look at it even more in depth. And let's go to like a 1 hour for a second, just to see what happened. I never looked at this chart. Yeah, so right here, you have a move. You had a swing higher, right? At like whatever that is, a million decimal points, 65. And then you went higher. So I would be looking at inside of this, there are going to be levels that get gained, right? Because to gain something, you got to get above the high that took you to a low. So right there, you got to get above that high, which they did. They closed above it. So now that's telling me that something inside this valley right here is gained. There's going to be a level of support that's in there that's gained. And I'm just going to say it's probably like, I don't know, somewhere in there maybe. Somewhere in there. Yeah, somewhere down there is gained. And at the same time, this could be a level as well. So you've got two areas that I would be looking at getting long. Those two areas right there, because I gained support there, and it's kind of like the start of the move. So it's the kind of the first area of support that I gained, because you can see, we can even see it right here. Like normally I would say, oh, remember I said the easy way to find it is you take the candle that made the low and you mark its high. But that got tested already. It looks like it got tested right here. So that's not the leg start anymore. That's not the start of the move up. So it's going to be somewhere else, probably right there. Something like that. Or in there. There's a couple levels in there. I don't know which one's the most significant, but they're not that far apart, like 53 and 57. It's not a huge deal, I guess. I don't know. So you got three potential levels right there that will get some action when we get back down to them. How do you know? It's the exact same thing. How do you know? You should be taking profits, right? If you were long, how do you know it's going to reverse? It's the same concept, right? You got to find the move that takes you to the high, and this is probably going to be smaller time frame.
Can I ask what's your opinion on the Elliott wave thing with the triangle of the last from the January 5th?
I'm sorry again. What was my what?
What's your opinion on the Elliott wave theory?
Elliott wave theory?
Yeah, from the 5th of January.
From the 5th of January. So from here?
Yeah, from the high, from the all-time high,
Okay.
going down to today.
I don't trade Elliott wave. I don't really see a point in it, but I honestly have no clue. I haven't really studied Elliott wave. I don't know.
All right, no problem. Just do your thing, and I'm listening.
Yeah, I don't study Elliott wave because I think the way that at least for me, this works way easier. Like it's more logical and less guessing, because it's all about, if I gain a level of support, then I should come back and test it. And I take the test. I take the first touch of that trade. The problem is I have to set a criteria to understand what's actually gained and what's actually lost. So what does that mean? And that's kind of what we've been going over. Like for example here, it's the same. I mean, it's the same thing. Like, I'll just show you just more examples of gaining and losing. Like, what does that actually look like? Because it's one of the most important skills that I think you need. But to gain, like a lot of people think, like intuitively you would think, gaining just means you're getting above. Well, you are getting above, but you got to get above something that was significant, something that took me to a low. So this high took me to that low. So if I want to gain support inside of here, I got to get above this first. I got to close above it, which I finally did. And now in the process of doing that, I'm going to end up having levels like all inside of here. There's going to be levels of support all in there. Some are tested, some aren't. It doesn't really matter, but you get the idea, right? Like we could just draw levels. You get the idea.
Of
Like
course.
And the levels are, I'm going to draw them from highs and lows of the candles, as I keep saying.
Just to confirm that I understand correctly, so in general, at the moment, we should look for the low that will get us to a higher high than January 5th.
Oh, for here?
No, not in here that you're doing right now, but
right
in
now.
general.
Right now. Well, I gotta lose support. We'll go like an hourly for a second. I gotta either gain a level of support or lose a level of support, and like to me right now, I mean, it doesn't have to happen right away, but you can see like we're starting accumulation. I'm sure if we pull out the old Mac Daddy, it'll probably tell us that I'm just assuming it's probably going to tell us that accumulation is starting. It looks like it is, right? Kind of looks like we are, right?
Yeah, that's why I asked about the Elliott.
Yeah, it looks like we are. Yeah, it looks like they're trying to, but just because accumulation has started doesn't mean you're ready to turn around. You've got to test levels that are untested. Like you got to test things that you gained. That's the idea. And what I gained is I gained this high right here, but in doing so, that means the levels inside of it are untested. So what I would do is I would be looking to trade long when we get down here. That's how I would trade it, right? See, that was a short there. But right now they're holding, it looks like they're holding something here. Yeah, they're holding that. They're trying to hold that support right there. Doesn't mean that they could. It doesn't have to go down there all the way. But what I would do is like, I don't try to predict so much of like where it's going to go or when. I just know, like, I mark it. I had the concept. I know that this happened and this is a rule. And so I know that when it does get there, then I take the trade. You know what I'm saying?
Smart. Yeah.
That's
smart.
how I trade. I don't try to like, because otherwise you want to trade the first touches of levels. You don't want to chase the level. Like if you got in right here, it's like this would have been a first touch. Like it would have been smarter. You could have taken this short. You could have shorted that because that's a first touch. That's support that got lost. And you can see it's the exact same concept let's see, maybe what's a 5-minute do? So I'm just kind of looking at it. Yeah, it's the same thing, right? So like it happens over and over, right? So like kind of the move that took me to the high, I got below it. Now I come back and I test it. I test something. I test whatever is untested in there. Wherever, it's not perfect, but you get the idea. So if I were day trading that intraday, then I would know, okay, so the exact same concept that we've been talking about, right? So I find the move that took me to the high, which happened somewhere around there, kind of where the level is. We close below it, but I would really want to see it closed on a more significant time frame, like maybe an hourly or something. And then that would be telling me, all right, that's a short. So then I could theoretically take that short and come back down and test some support down in there. But you get the idea. Like right now, they're accumulating. But so what they do is they sort of ping pong back and forth between levels that are tested and untested. But I try to stay away from like looking at these tiny time frames because you just drive yourself crazy. You drive yourself crazy with it. Yeah.
In general, I think I got the vision, but how do you exactly choose which from upper side to choose? Like, which spike do you use, and do you expect, like, in what time do you expect the spike to get back up? Like, in general, how do you choose?
I'm trying to understand the question. How do I choose what spike? What do you mean?
From where to set the point? Always from the highest point?
And I'm just trying to understand in relation to what.
As you're setting the lines, yeah.
Yeah, I'm
purple
drawing
lines.
levels of support that are
Yes.
untested. Yeah.
So can
Yeah.
you please explain how do you choose these support
Yeah,
levels?
so I said in the beginning, levels are going to come from a wick, the high of a candle, or the low of a candle.
Yeah, that's what I meant about the spikes.
Yeah. So how do I know which one? Well, I want to mark the ones that are untested. So if I'm coming back down a leg, I'm looking at highs of candles. If I'm going up a leg, I'm looking at well. So like if this were to go up, right? Like if that were to do something like that, right? What would I be doing is looking at the lows of the candles. So like in this example, right there, that's testing a low. Right? I marked the low of the candle, and it's pretty much testing it right there. So that's where I would know, okay, there's a level there.
Yeah, I think I got it.
But what you do is you look at consolidation, right? Like you obviously can't see it as well on an hourly. You would probably see it better on a smaller time frame. But you look at the consolidation, and it's telling you, well, you have a consolidation because there's a level there. There's a level of support there somewhere. And it's either going to be gained or lost. And I explained over and over of what gaining a level looks like. And the exact same thing is what losing a level looks like. You know, losing a level, like over here, we're losing levels in the smaller here. So, okay, for example, I have a move that took me up to a high. To lose anything inside of this this peak, for lack of a better term, to lose anything inside of that, I got to close below the move that took me down. That took me up. So I got to close below that low, which happened over here. So I know support was lost. I know support is lost inside of here. The next thing I got to do is find out, well, did they leave anything untested in there? And I don't know, you'd have to go back and look and kind of see, was there a level lost untested? And not really. Looks like they got everything. I'm looking at the highs and the lows of these little swings inside of it. Everything pretty well got tested. So if we do go higher, so this is just telling me we've lost the level, and they did. They sorry, it's actually here. It's smaller. Same concept. The move that took me to the high, we got below it, and then in the process of doing that, they came back and they tested levels that were untested inside of this little peak that I've given you. Something like that. I don't know, it's not perfect, but you get the idea of how it all works.
Yeah, I think now I got it. That's I can thank you enough.
Yeah, so I get that new highs are untested, but when it drops, it's actually is what is confused. So support, because it passed the support. Yeah, it's all about you've got to.
So, can I ask now just to see if I understand correctly, as I said that I got it. So now you have the purple line. In general, we are going to test the support level at the high of the purple line, and if we are passing through it, then it's a new support level gain.
Well, it'll be inside of it, yeah. So right there on the 4 hour, right, for example, you come up, you make a high, and then you pull back. Then you pull back, right? So inside of there will be a level once you get above it. Once you close above that high, this stuff in here is what you're going to end up testing. The supports in here, which will be the high of something, which is probably right there. So like 57. I don't know, something like that. There's a couple levels in there. You could 52 or 57. Something like that is what I would expect to see happen. Now I'm not saying you short here. I'm not necessarily going to short it there. I'm saying when it happens, you just let it happen. You take the long. You take the long off of it. And then all you do is you look back to your left in the leg that took you down and you find levels of support that are lost. What does that mean? Well, it's the exact opposite of gaining. So here we have to move up. We got below it. Is there something in there that's untested? Maybe something like that. You know, that's kind of like how I would look at it. But enough of this chart.
Thanks. Thank you
Yeah.
very much.
Yeah, I mean that's a ton of examples. I think if there's any other questions, I think that's kind of the fundamentals of what I do and how I read charts.
Just a real quick question. Based off of this chart, where do you see, I got in a little bit late, so I apologize if you have to repeat yourself. Where do you see the trend moving then for Tron?
What was it for the TRX?
Yes.
TRX BTC?
Yes.
So again, like I know that the high has been lost. I know this is my leg up. I want to see them come back and test down here, support that's untested. So somewhere in this congestion here, right? You'd have to go in on a smaller, but if that's untested in there, that's where they should take price. Now, will it happen right away? Not necessarily. And the way that I would distinguish that is because I want to make sure I don't want to be gaining levels as if I'm going down a leg, I'm sorry. If you're it's a pretty simple rule, right? If you're in an uptrend, you don't want to lose levels if you want that trend to continue. If you're in a downtrend, you don't want to gain levels. If you start gaining a bunch of levels, especially like significant high time frame levels, right? Because your higher time frame is always more significant than your lower, and it's just simple logic, right? Why is that? Why is it simple? Why is it logical? Because if you look at a candlestick, it's trading that's happening within a predefined amount of time. So in this chart, a 4-hour candle, that means this is a bunch of trading that happened within 1 4-hour period, right? Well, how much trading can happen in a 1 4-hour period versus, say, a 5-minute period? Well, obviously a lot more, so it's more significant. So when you have levels that are being built on higher time frames, those are more significant than your lower time frame levels. Does that make sense?
Absolutely. Thank you.
Yeah. So that's why I start the analysis with the highest time frame, and then I start finding my levels of significance, the levels that are important, levels that are of support that are gained, or levels of support that are lost within the leg, with the trend that I'm in. Obviously, we were in an uptrend and we're having a correction. So how do I know? I think you came in late, but I spent the better part of like the last hour explaining how to see. How to know when your trend is going to reverse and what things pretty much have to happen to do that. And it's essentially, it boils down to you're either gaining support, you're losing support. The first level of support that you gain inside of a leg of where a move happens, so like a trend happens where it really starts from, and you could probably agree, right, that trend kind of started from there. When you say, yeah. So to me, once I get above this high, right, this red candle, like once price got above that high there, then I know inside of there's levels of support that are probably left untested, and that's where they take it. So it's like this ping pong thing, and it looks random, but when you understand how to break it down inside of it, it's not random at all. And what you do is you don't chase the move. You just a lot of people when they ask me, they're like, when they see me trade, they see me getting in trades, they're like, wow, like it's really ballsy because you're going against the trend. And a lot of the times I am, but not necessarily. Like if I were to get long down in here, what I would expect is like accumulation on the way down. So as I have a significant level, I would expect accumulation on the way down, and then once they hit that level, we're going to get a big pop, because the idea is during the accumulation process, they're testing levels of support that we lost on the way down. That's why you get these huge rips off of leg starts like that, because they're testing all this stuff. And you can see they're doing it. They're testing it all on the way down. Like right there, that low is testing there. You know what I mean? So
Yeah,
like, so like right there, that low is it's getting tested right here. So like, just to show you an example of how they're doing it, they're testing all this stuff on the way down, so that when they do get down to this final level of untested, wherever it is final level that is untested, then they can rip it higher, because they don't have to worry about the first touches of every other level. So that's the idea. You trade the first touch of a level. You don't chase it. Now, I mean, if I'm not saying like what you shouldn't. I'm not telling you how to trade. You can do whatever. Like, you could say, okay, well, this is wedging out. I'm thinking it's going to break. Once everything is tested inside this wedge, it'll probably break and go lower. That's what I would say. You know what I mean?
yeah, no, that's spot on. I feel like a lot of people chase the moon. Something's
Yeah.
going out, and they jump in at that point.
Yeah, and I'm not gonna be right. You're going to be wrong. Like sometimes, even for me, like sometimes things happen, and I'm like, man, I don't understand this move, so I don't take it. I don't take the trade. You just take what's clear. Like I try to trade clear, like they're clearly untested, and when price gets there, I know it's an untested level. That's the highest probability trade. That's really the pattern. It's a pattern that's not really a pattern, if you know what I'm saying.
Absolutely.
Let's see. Another guy asked, would volume profiles help you identify untested levels? Well, I don't know. Let's see. Can I put volume profile on here? I think the answer is yes and no. I haven't worked a lot with volume profile, but we'll see. Let's go to, yeah, I'll just leave it at like 2 hour. I have a friend on Wall Street that trades a lot of volume profile, and honestly, like everything is an indicator. It's just telling you what you can already see on the chart. Let me go back to an hourly. I don't like this. I don't trade volume profile, so I could be wrong, but I think the idea is you trade the higher volume nodes, right? So like this big purple node would be a level of support that a volume profile trader would be interested in trading. And it just so happens that that area is the same area of congestion, because really what's happening, right, is volume profile is just telling you where do all of the trades happen. So you're getting a lot of trading happening in this consolidation, which I've already said was accumulation, right? So it kind of leads me to another concept that I just thought about I should tell you is accumulation, will target distribution. Distribution will target accumulation. So when you have distribution somewhere up in there, it's going to try to target the previous accumulation that started it from. So it's going to try to target that, which kind of goes in line with your volume profile node. So yes, I guess it could tell you, to answer your question, it could help you identify untested levels. But the way I do it is based on that criteria, so it makes it more exact. But yeah, you could be lazy and trade it that way. There's a lot of ways you can trade. Another question is, how do finding levels compare to fibs? Can you overlay the fibs to see how they line up? They should line up if you draw from the proper level. And I'm not sure if I know a lot of people draw from like the highs and the lows. I don't use fibs a lot. I'm probably drawing it wrong, but let's see. A lot of people draw from the highs and lows. Damn, what's going on? Let me get rid of this volume profile for a second so I can manipulate the chart. Let's see. I guess, I don't know. To me, it just looks like a lot of nonsense, but because for me, like drawing fibs has always been. I mean, I guess, but I see what I did. I started from where I thought it gained support, so that's how I drew it. And I mean, I guess it lines up somewhat. I don't know, to some degree.
Mike likes volume profiles. He says that they're like money magnets, is what he calls them. So the higher the volume profile, the more
Yeah,
it's going to
yeah,
attract to it. So it's kind of nice visually. Can you see that without the volume profiles? Can you see
yeah,
that? Oh,
yeah,
so you see it. Okay.
yeah. So like that's what I explained before. Like this area is accumulation. That's where the leg started.
Gotcha.
That's where it took me up. So then when we go to volume profile,
So typically where you're drawing those boxes where it's accumulated, that's
yeah,
pretty
you can
much
see
I
your
gotcha.
your friend said where the money magnet is, where these high level volume are. That's where it's going to target. Well, it lines up, right? Because really, that's what it is. Like, I mean, to break it down logically, that's what's happening. You've got these high volume bars up here where I've drawn these boxes, and it's where all the trading is. It's because it's congestion. But it doesn't help you as much. I don't know. I don't really think it's that useful because, like, well, what do you do when you're scalping up in here? Like, I don't know. Maybe it helps. I don't know.
You can identify when it's thin, I think, above or below. So if you move out of those zones, you know you're in trouble, I guess. I don't know.
Yeah. See, I don't know. I like to have a more. The way I trade is it's more of a kind of a scientific thing. It's like an if then. It's very much an if then. If this happens, then this happens, and I know where to trade from when it happens. So that's why I don't use any indicators. I trade completely naked charts, and what not to say that you shouldn't use indicators. You can use whatever you want if it helps you. But the idea for me is you get to a point where you don't need them anymore, and you get to a point where because like a lot of people, man, they put their charts up, and you can't see anything happening on the chart because it's cluttered with indicators. You can everybody that's ever done anything in trading for an amount of time, they will all tell you that same thing. As they progress, they start saying, well, because it's a path of knowledge, right? You just keep learning and learning different things and put it all together. So, yeah, let's see. Anything else? Yeah, yeah, yeah. If you're tuning in, if you've been watching this, I'm not really trying to tell you where price is going to go because that's not. Yeah, it might make you money in the short run. I mean, you could lose money. I could be wrong, and you lose money. I'm just trying to show you some concepts. Like when I logged into Twitch, and I was kind of surprised because I saw, there's actually a fair amount of people watching trading, looking at charts. So I was like, oh, okay, let me take a look at this, and I started chiming in the chat, and then I guess people were, Twitch chat's like, yo, what, full of it nonsense. And then so it got me on here, and I'm just kind of giving you an example of stuff that you can't really find on the internet. You're not really going to find it unless it's somebody that has been taught this. So now you know.
Yeah, and what you just said was it holds so true for older traders. Like when people first get into it, they have stuff everywhere. Their charts crazy with everything going on, and the more you've done it, and the more comfortable you get with it, you really don't need that stuff. You can just kind of see it.
Yep. That's true. That is very true. I've had people tell me like they're surprised at how confident, and that's the thing. Like once you go back, like what we're doing is essentially we're just back testing the idea of what I'm showing you. I don't know. I showed like 5 to 10 examples of different time frames, how it all works together in different products. Um, you know, somebody asked, "Do I trade? Do I trade anything? Do I trade forex?" And I sure do. I trade a lot of it. I actually trade in the futures, but um, it's the same thing on like every chart, man. Every time frame. Um, every product does basically the same thing. It's just a matter of do you understand what the chart is telling you? You know what I mean? It's here's the exact same thing. Like it just jumps out at you, like you can tell. The same exact thing. The move that took me to the high, I got below it, then I can short it up here. It's why, like, and it ends up being crazy because a lot of people, especially in the crypto world, they trade news, right? They chase the news. Well, what's happening? What's the news that's coming out that's going to make this happen? And what I'm telling you, believe it or not, I don't read any news. Like, I really don't look at any news because the chart tells you what it's going to do before they do it. And the reason is because they set up the move before the news happens. The news just gives you liquidity, right? It just creates a catalyst for momentum that's already set up to happen, right? Like, I don't know what the news was today. There was news probably today that caused this huge move up in euro dollar, right? Well, that's fine. It doesn't matter to me because I can tell you, I can see we gain levels down here. I can see we gain this. Like I can see, like, in the process of this of coming down, like I can see like levels are gained, and I can see over here levels they're lost, and I don't want to leave a bunch of levels untested. So I know, like, well, maybe I didn't actually get this move. I was overnight. This is actually a real trade that I had. I got this move. I took that move right there, and I ended up going to sleep. And then we pulled back, and they're basically all they do is they pull back and test levels that are untested, and they pop off of them. But we had tested everything here like that. My target was right in there because it's these lows. We were testing it, right? And then they just keep doing the same thing. There was whatever news was, and in the process of it happening, right? They just go and test the level they left untested over here. Like, it just does the same thing. You could even say it's here. It's probably there. I'd say it's probably there. But whatever. You get the idea. It's the same concept. It's predictable once you know how to trade it. Well, where do you take this trade? Well, you would have taken it right here at where support was gained, right there. So you would have taken the first touch of it, and then on the smaller time frame, it probably looks better. Let's look. Yeah, somewhere in there, somewhere inside of there. I would have been like, all right, I need to get ready to take a long. But yeah, as I would be coming down, I'd be looking in here like, well, where is support? Where did we gain support inside of it? Because the reason why is, again, the exact same concept I've been talking about. This move took me down to a low. In the process of making that high, I got above it. I closed above it. So I know there's support inside of here. And then I would be looking to trade it. Maybe really it's there because that's kind of the high of that candle there. So it's somewhere down in there. It's not going to be perfect all the time, but you should be cued in and know, okay, boom. So you could have taken that trade, but yeah. Anyways, why do I stream on YouTube and not Twitch? Honestly, maybe I will stream more on Twitch. The reason is because I didn't know there were people charting on Twitch, so that's why I haven't. But yeah,
it's a very new thing. They just started
Yeah.
up their crypto section just within the last month, I believe. But yeah, it's super new.
yeah. So yeah, I know this is a crypto room, so go back to crypto. But any other questions, like, of something that I haven't gone over? Why do I not trade crypto? I've just always traded forex and futures, and I started out trading options and stuff like that. I have traded some crypto, but I just really haven't found anything like a platform that I like. Like, I haven't haven't found like a good broker with a trustworthy broker. You read the news about all these different brokers getting whatever happens and people losing their money. So I just haven't got into it. Not necessarily that I'm against it. I've traded some on Coinbase, but yeah, I mean, I don't know. You can make money on any chart, if you know what to look at. If you know what's going on, it doesn't matter. Like, they all do the same thing. So it's not necessarily Some will be more volatile. Obviously, Bitcoin has been more volatile than the others, but that's just because you don't have government regulation stepping in. Like, just give you an example of how crazy like the S&P 500 is. So the exact same concepts happen over and over. This is a monthly chart. This is the crash of the dot-com bubble. This is the financial 2008 housing bubble. And the same thing happens, right? Over and over, right? So like I take a look, okay, well, what's the move that took me to the high? Okay, it did. Took me to the high. Did I close below it? I did. We closed below it on the dot-com bubble. You got below there. So that's setting you up. It's telling you the trend is going to reverse and you're going to go down. And what are you going to test? You're going to test the level of support that got gained, and it's right there. And there was the low that they put in. You know what I mean? And on the way down, you're going to end up testing levels. You're going to test levels on that you were gained on the way up. So it just works like that. Like, you know what I mean? If that makes sense. That's really all it is. It's the same concept over and over. On every chart, doesn't matter. The same thing. They do it again. The financial crash, the housing bubble, right? I'll show you something really interesting that I thought was cool. So you make a move that takes you to the low. You close below it. I'm sorry, the low that takes you to the high, you close below it. It's telling you trend is going to reverse. This is called losing a high, the thing that we talked about over and over again in the beginning. And then you have a big downtrend. And what do they test? They test something that's untested, something down here, right? Because that's a peak. That's a little kind of the start of the move. This is kind of the start of this move up. I mean, there's probably stuff down here even too that's untested. So maybe the next crash is going to take us like way down here or something crazy. I mean, I don't know. I'm just speculating, but you get the idea. Like that might be untested down in there, like the low 500s, which is like the end of the world situation, but you get the idea. But it's the same thing that happens over and over. So inside of there was the low that we put in on the housing market crash. Now, check this out though. Back in 2015, the same stuff that I'm telling you, we were going to crash, but they saved it. Here's the move that took you to the high. What'd you do? You closed below it. So if you knew how to trade, right? If you understand this, you'll be like, oh, wait a minute. We're getting ready to crash. Like, this is the top. This is the distribution, right? If you pull out the old Mac Daddy, right, it'll tell you. It'll probably tell me, was there distribution there? Let's look. I mean, because everything is lining up, right? Everything was lining up. Yeah, look. Boom. Distribution. We were converging down. You got all the signs telling you that you should be crashing. And they know this, right? And they can't let the market crash because it's like the end of the world type situation if it does happen, right? So back to what I was saying, you make a high, you lose support, and then they held it. They kept it. They kept it from crashing. And then we get this huge rip higher. But so that's the idea. Like, man, anything, let's see. What's another product? GoPro. Let's look at that one. That's been in the news, but let's look at it like from a longer term standpoint. Just to show you guys that all of these concepts work on any chart. Let me go to like a weekly because I can't really see. So back when GoPro was an IPO and it came out, look, the same thing, right? There's your move that took you to the high. What happened? You got to close below it. I think it happened right there. And you come back and you test levels that were lost up in here, which is probably on a daily chart. Really quick. Yeah. So you finally close below it, I think. And then you're coming back and you're testing level. You know, they come back and they test the levels that are lost on the way, on the way down. And then, so there you go. You would take your trade there and okay, so, well, where's price going to go? Well, what did I gain? Somewhere in there, right there. Like that's a crazy move, right? That's a crash. That stock crash. It was like $100 and went to 38. So all these guys, like you get guys that push penny stocks. I don't know, a penny stock. They all do the same thing, man. On any product, it doesn't matter. The concepts work on everything. And then they just keep making new lows. Like once you make a low, you're starting a new leg. And they're just going, a new further down. So they make a low and they continue. The same thing. Happens on everything, man. Doesn't matter. Trends, how trends work, yep. Yep. So anything else? Yeah, I mean, we're talking about. I mean, I showed you guys like just all kinds of examples of just different stuff of how to look at charts the way I look at them. I don't know.
Yeah. So if you're winding down here, was there a YouTube you wanted to plug or a Twitter or anything like that?
I stream on YouTube, DopeTrades. I live stream every day. Don't really have to plug it. I think people have found it on their own because I've gotten a lot more subs today from doing this. But yeah, maybe I'll start streaming on Twitch too. I gotta check it out. But let me just answer this question. He says, "Yeah, I'll come in from time to time. Just hit me up. I have a website. It's called if I can plug that or not.
Yeah,
if
sure.
not,
Go ahead.
it's I'll just type it in the Twitch chat. It's TradersUnderground. .com that I'm launching later. We got deleted or .co. It's okay.
No problem.
But tradersunderground.co. It's on my YouTube page. You guys can check that out. YouTube Dope Trades. I think you can just search it and find me. And I'm actually live streaming now, but since I've been talking to you guys, I haven't taken any trades. But yeah, so I just kind of doing that. There's a guy asked me real quick, how do you know if something was untested? And then also I was asked, would I come back? Yeah, I would definitely come back. You guys are cool, laid back. How do I know if a level is untested? It's kind of common sense, I guess, really. But let's see, what is this? I don't know, 4 hour. So right here was an example what we talked about earlier. Was this a good example? Maybe it was a daily. I think that he actually overshot it, but it's okay. Yeah, look. How do I know if it's untested? Well, did price get back there? Like for example here, right? Did we gain a level of support because I got above this? I got above that high, so I had to move down, make a high. Price got above it, and in doing so, there's levels inside of here in this valley that price doesn't come back down to respect, I guess you could say, right? So when it does come back down, you would take the trade. I think there was even another one here. I'm not exactly sure. We didn't actually get quite down there. We got close. Maybe it was here. Maybe it was right there. Yeah, that's where it was. But so the idea is untested. Like, okay, like here's an example. Right in here. This is exactly another example of losing support, right? So losing support is the opposite of gaining support. So here you have a move up, right? And yeah, a lot of people keep saying it's higher highs and lower lows, and vice versa. And that's fine. Tradersunderground.co is what the site is. Anyway, so it's not important, but you can find it on the YouTube, no big deal. So losing support is the exact same. And how do you know if it's untested? Well, here we have a move up, and then we go lower. So we got below this. We got below that low. And inside of that will be a level, which is what they test on this candle right here. So let me get rid of this. They tested it right here. So that would be tested. So the next time, the idea is the next time, if Bitcoin manages to get head back up there, right? If it manages to get above, which it looks like it is, it looks like it did gain. Looks like to me that got gained, honestly, guys. Bitcoin gained the high there, so we're probably going to go back higher. Well, the idea is the next time we come back up to like this 18,000 level, that's already tested, so we should go higher. You know, that's what I mean by untested. Has it been tested? Yeah, it can test more than one time, especially on lower time frames. But that's the idea. I try to trade it. I trade it off of the first test when I trade anything because it's the safest trade. It doesn't mean it's always work, but I'd say it's like 90+%. I mean, it's ridiculous if you understand it. So, hope that helps you understand that. I kind of wind it down. Anything else?
Yeah, no problem, man. This has been great. I only caught a little bit of it, but it was awesome. And thanks for all the people on Twitch watching right now. Hit that follow button. Thanks for watching Crypto World News for right now. Remember, there's a 24/7 stream, guys. We're only 8 days in, and there's going to be a lot more guests, a lot more things, a lot more ideas in the future, and a lot more great guests like DopeTrades here. This was an excellent session. I really do appreciate it.
Hey, no problem, man. You guys take care. I'm gonna go have some lunch.
Thanks,
so much.
bro. Appreciate it.
Have a good one.
Take care, guys.